But politics, as I said, have intruded so far into the analysis that it's difficult to disentangle what might happen from what we want to happen for some other reason. For instance, it is possible, nay, I'm sure it was probably likely, for some people who were hoping that the president would have been defeated at the last election, for the economy in the run-up to the election to perform worse, for obvious reasons, because that would have an effect on the election. People who were supporting and hoping that the president would get reelected were hoping the opposite. So most of the analysis that you would read in the month or the year reflected these biases rather than the dispassionate economic analysis that you hope to affect. Now, there's reason, of course. That's because had the presidency changed, we would probably be looking at different economic policies, but in fact it did not. So we can be reasonably sure now that the election is set what we're going to get. Whether we like it or not is not the point. The point is we know more or less the type of economic policies that the government, be it the Fed, be it spending, be it taxes, that we're going to get. After all, we've had 4 years of them, and they're not likely to change very much. So that much is set. I would say, well, let's put it this way. The problems we're looking at here, I'm going to go through 3 areas and go through them rather quickly. I'm going to try and make both analysis and prediction, although prediction less so, for the U.S. economy. And here are the areas I'm going to handle it because we are slow on time, and that's, of course, my fault, or at least our fault. For the U.S. economy, I'm going to look briefly at labor, at investment, business investment, at economic growth, at consumption. When you talk about business investment and consumption, those are the 2 great spending drivers, and of course you have to include the government. So the 3 great spending drivers of the U.S. economy are, or really any economy, particularly the U.S., but we're talking about the U.S., investment, consumption, and government spending. And I think we have a pretty good idea of what we're going to get in the next 6 months or a year there, and what that might predict for the U.S. economy. I'll also look at labor because and working because that's so very much a dominant topic. Having looked at that on the U.S. economy, I'm then going to look at what that might predict for stocks and what that might predict for currencies. Okay? Then if we have enough time, I will briefly look at some of the problems that are out there in the world aside from the U.S., and these I'll tell you what they are. For the problems we have, potentially we have a world economic slowdown. We have the same, I'm talking Europe, Japan, China, and the United States. None of these are particularly independent anymore. Some of them are in different places than the others, but they all matter. For the problems we have had in the U.S. and still have, the unfortunately named fiscal cliff. The idea that the U.S. is going to plunge right off that is just, I mean, it makes a good metaphor, but it has no sense whatsoever. Journalists like simple narratives. They like things that sell newspapers. They like things that grab your attention. They like predictions. They like overstatement. They like calamity. I'm not saying this as a thrust at any particular profession or at journalists in particular, but there's an enormous clamor out there, and it's very, very difficult for journalists or anybody else to make themselves heard. Shouting louder seems to work the best, and that is often what you get. The idea, and I just want to get this out there, but then I'll deal with the others in a second. The idea that the U.S. is going to suddenly permit tax increases, which are coming anyway. Even if it went off the fiscal, even if no agreement was reached in the United States, taxes would still be going up because of various programs already passed during the past 4 years. They're all set. The tax program, taxes are going up for everybody in the United States. When we talk about taxes in general, we tend to focus on income tax. Is that rate going up or down? But everything you do, and I speak in the United States, read your W-2 form. Read your, if you're an American, look over your payroll stub. That length of tax, that list of taxes gets longer and longer and longer. Those are all taxes. And many of those, which have nothing to do with income tax, are going up. Sales taxes, fees, the list of taxes is endless. So the idea, which has been much promulgated in the press, that if the Democrats and Republicans don't come to some agreement, the U.S. is going to immediately, January 1st, deduct 4% from GDP. This is nonsense in almost every description. First of all, it wouldn't happen on January 1st. It would be spread out over the year, or the next 2 years, whatever the programs are. Second of all, this is a political decision. Neither party. But it's not only a political decision. There are responsible people in D.C. In fact, most of the legislators, most of the executive branch, these are actually responsible people. They have to weigh politics, their own careers, meaning getting reelected, and the good of the country. Remembering, of course, that they see the good of the country very, very differently. There's no point in questioning the motives of most people in D.C. Makes a great copy, but it's not true. So, the idea that either side is going to permit this to happen is not true. It has never been true. It's exactly analogous to what has happened in Europe with the debt crisis. The Europeans have said time and again, Max, so many times that you could probably fill 4 days with various quotes on this one topic. We will not let the euro fail. How many times that been said over the past? Well, they're not going to, and they haven't. So it was always the case from the very beginning that the Europeans would not let this fall apart. And it was also true that the governments had the power to prevent it. And so this latest iteration, this latest Greek rescue, was inevitable. It was bound to happen. They were never going to let Greece default. Now, of course, Greece has already defaulted, but we don't want to talk about that. They were never going to let it be uncontrolled. They were never going to permit this. The only way that Greece will leave the euro is if the Greeks elect a government that chooses to do that. So these two drags on whatever market you want to look at or analysis, the U.S. fiscal cliff and the European debt problem, are nonsense. They're nonsense in the sense that the world is going to end if one of these things happens, and it won't. Now, they're not nonsense in as far as they affect views of trading. So if tomorrow the two sides, John Boehner, I guess the representative of the Republicans, John Boehner in the House, and President Obama, decide that they're going to play a hand of poker to settle who wins, winner take all. And we saw an over-the-shoulder, although say Mr. Boehner and President Obama, or Speaker Boehner and President Obama, to use their titles, are sitting at a table, sort of like a World Series of Poker in Vegas. And you can see their cards. And the market can react to their cards, but they don't know what the opponent has. So, in a case like that, and you see one side or the other having a dominating hand, the markets will react to that. And that's exactly the case, and that will continue to be the case.